The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Welcome, folks. This is Jacob Shoup filling in for Tommy O'Brien. It is May 20th, believe it or not. I don't know how that happened, but we're going to start this week off strong. Let's take a look at what we got going on. Of course, the Dow closed above 40,000, which is huge. Of course, we're pre-market right now, but the E-mini is trading about sideways. We're at 5,329 right there in the E-mini. The Russell futures off a little bit, about 0.19%. Those NQs sideways as well, 18,646. The Dow futures at 40,132. Gold contract made some big moves the other day. Let's take a look. In 2 weeks. So we're trading at 2,422 in that gold contract. Silver futures also up about 1.27%, pre-market at 31.64. And copper is settling nicely above the 5 area, above $5. Of course, we went to a high of almost 5.20 and then marched back down. Crude oil liking this area that it's in, around that 77 to 79, trading at 78.83 right now. We may, I don't know how this is really going to impact the oil market. Of course, America is producing most oil, but supposedly drilling will slow down, or at least new leases. The issuance of new leases will slow down in areas of Texas, which of course we're drilling more than ever, because of a lizard. It's a rare lizard, and well, can you imagine? It's pretty impressive that we do stuff like that. Tesla at 178.11, and then the dollar at 104.60. Of course, we have NVIDIA price target was raised by analysts. We got stuff coming out this week for it. We have earnings, of course. That's going to be pretty interesting to see what happens. NVIDIA is down a little bit right now, about 2%, but I think the market will probably wait to see what happens with that. Now, it's weird in the market where you have, I suppose this is true maybe of a lot of eras in history, but if NVIDIA doesn't come out with good numbers, that could be somewhat bad for the market. So we'll have to wait and see what goes on with that. We're going to have Tommy O'Brien on today at 9:30. He came on Friday with me as well. Talk a little bit about GameStop. They have blown up in, another meme run, essentially. And they came back down. Wow, look at that, huh? Right back down to 22. Well, the company issued, $45 million in sales of the stock after weak Q1 earnings. Everyone couldn't believe it. Well, obviously, right? So they came back down on this. But what's really unique about this as well is that the, quote unquote, smart money, they lost around $13 billion. Of course, they had, short positions, because what person wouldn't, right? If you looked at this stock in any legitimate way, fundamental, technically, whatever, you short this stock, or you just don't even touch it. However, with this kind of short squeeze that happened, investors lost $13.1 billion, which is pretty insane. Trying to see if there's anything else from it. Yeah. Huh. I just thought that was interesting. And I'm surprised they didn't, kind of learn their lesson from it. From, what was it? What Capital Group that just completely went out of existence. I forget the name right now. It's kind of early. But regardless, yeah, that's what we got going on. Of course, we are back down at 21. And we are going to continue to move back down, to this 13 level. And honestly, lower. It's not a good company in any capacity. We can talk about some news that I find a little bit interesting. And that's, I haven't spoken about it in a while, but it's, about cybersecurity and cyber attacks in general, and how this is really one of the new fronts of kind of global conflict. the government has actually come out, and this was something that I never really understood why we haven't developed something, right, for different industries and essentially standards for cybersecurity. And, so we had massive hacks of certain hospitals in the recent months that really shut down everything. And now the government has come out and said that new standards need to be implemented, which is fine. That's a little bit different. I do think the path forward for this is companies that are going to start offering essentially cyber insurance. And in a weird way, these insurance policies, which will probably be required or should be required by the government to hold, because this really can be so devastating in a major way, will somehow implement the standard, right? So the U.S. Health Agency is seeking to shield private hospitals from a deluge of cyber attacks. ARPA-H will dole out more than $50 million to develop tools that can spot vulnerabilities in hospital software and deploy fixes. I actually have I was going to the Tampa DEF CON group meetings, and there was a guy there. He actually led, I don't know the hospital, and it wouldn't matter. I guess I wouldn't say it anyway, but he led security for a hospital in the Bay Area. And just picking his mind was amazing. And he's saying it is just relentless and constant. People trying to get into the network. It's up in the air what they're trying to get. But regardless, whatever they're getting is sensitive information, whether it's what the hospital is doing, proprietary tech that they're using, that they're buying from other companies, or really just the information of either all the patients or certain patients. So the U.S. government is seeking to play a more active role in protecting the private healthcare sector from the deluge of cyber attacks that have disrupted patient care and left providers unpaid. The U.S. health officials will unveil Monday a new program to create tools that defend internet-connected hospital equipment from cyber attacks that could take them offline or leave them incapacitated. And if I fill in any more this week, I will look up what those are, because it's going to be really interesting, and it can give you kind of insight into what the government is seeing as like the major sources of vulnerabilities, and how they seek to kind of remediate those. The effort could shore up protections for imaging devices used to detect cancer or assist with surgeries, EKGs that can monitor heartbeats, and systems to allow doctors to prescribe drugs to patients. And, if you're sitting there and kind of thinking, like, what does this really matter? One, this industry, and I mean cybersecurity, obviously it's huge now, right? In recent times, we've seen a reduction of spending into cybersecurity by very large companies. I think that is wrong in a major way, and it's just, at that point, it's just a matter of time. And what companies do when they do stuff like this is they kind of play the game of you don't need to be faster than the bear, just faster than the other person, right? And that's not really a security position in any capacity. It's just a matter of time until companies that reduce the spending on this kind of stuff get hit in a major way. And it'll continue to be a thing that happens unless, insurance steps in, or, really the government steps in some capacity, because for whatever reason, the companies aren't regulating themselves to do that. This is super interesting as well as to why it affects people. Talking with, EKGs, for instance, people can get in that network and disrupt it. And I think, too, this isn't about getting in a network, but if you remember the pacemakers back like 10 years ago, the guy hacked into the pacemakers. I was doing that to try to perfect them or, make them better. But, these have serious implications. So, folks, stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
What is going on, everyone? This is Jacob Shoup filling in for Tommy O'Brien. This is the morning market kickoff. Taking a look here, you have Spirit Aerosystems laying off 450 people. These guys are the ones that make the fuselages and the door plugs for the Boeing 737. Of course, you know, there's some discussion whether or not they're responsible for some of the issues going on with the Boeing planes. Regardless, any negative kind of production on Boeing's side is going to hit these guys pretty hard. They, of course, lost a ton of money, a ton of market value last year when it was determined that some of the fuselages they were using were not, up to quality, essentially, right? And they got killed entirely. Red Lobster, of course, is going bankrupt, and that is just going to happen. Anyways, what I really wanted to talk about today, and this is something to look forward to kind of in the future, if you ever hear this name, right? Because it's not spoken about a lot. Some of you might be familiar with it. But, we're talking about the Air Force is putting out new contracts, right? And what they want are these things called drone wingmen, okay? So say you have your, main battle station plane or whatever they call it, and on the sides, they want these autonomous ships that can, either refuel the aircraft or can defend it in case of an attack or whatever. And this is, kind of part of this process of the military of really trying to progress the military into the, quote unquote future or whatever they see that as, right? Just kind of new warfare. And so, you look at things like Lockheed Martin or Boeing even as an answer. And in fact, it was neither of those that got this contract. In fact, this is a company called Anduril. Okay, this is from about, a few weeks ago, but it remains you kind of want to talk about it because they've given even more countries some of this new tech, right? So let's take a look. Anduril and General Atomics have been designing this, keeping it going. They're also, Anduril itself, I'm going to pull over the company here. Take a look at this website when you get the chance, right? So these guys got their start. The guy's name is Lucky Palmer. They got their start actually providing counter intrusion on the border, right? The southern border of the U.S. They got about, I think, a $1.5 billion deal 2 years ago, I think, like in April of 2022. And they've been building it out in a major, major way. It's kind of funny because Lucky Palmer doesn't look like your traditional type to fill this in, but this is kind of like the new age, right? I don't know. It's just really interesting because this company isn't public yet, but I believe in the future they're going to go public. And when they do go public, they're going to have, their valuation is going to be massive. I mean, you go to the border, they use this all the time. I mean, this is obviously maritime counter-intrusion, so this will go probably on like freighter ships or, merchant marine vessels and everything. Counter-intrusion used all over the border. This is counter-UAS, which is definitely necessary, but they also have their own kind of unmanned systems that also patrol the border as well. I mean, this is just kind of insane stuff. But take a look. This is, again, the new thing, the Fury. So the government, the Air Force wants a bunch of these. And if it works out, they're going to be probably going to go ahead and build out the rest of the capabilities, or at least a large portion of them, for the new push that the military is having. Strongly recommend checking them out just because it's neat. They have a cool name. I think that's from Lord of the Rings, so good on him. And it's just interesting seeing the new generation, really ingrain themselves in the future of tech. Excuse me. Good Lord. All right, some good news for, I would say, honestly, the general economy, but definitely if you live in these areas, taking a look at some of the Redfin data, and you're actually seeing massive declines in rent, which is huge. So let's take a look in, I'll pull over this article here. This Sunbelt metros, Austin, Texas, and again, keep in mind too, these are areas that have seen really, large influxes since, quarantine. So you had Austin, Texas, down 6.6%, Nashville down 5.9%, Jacksonville down 5.6%, Miami down 5%, San Diego down 4.7%, Phoenix down 4.6%. They say Tampa down 4.3%. Maybe that's true, but I haven't seen that. And then Orlando down 3.2%. Sunbelt has built a ton of new apartments in recent years, partly to meet the surge in demand brought by the flood of people who moved in during the pandemic housing boom. But the boom is over, and now property owners are struggling to fill vacancies, which is causing rents to fall. Rent in Sunbelt markets are also just coming back down to earth after skyrocketing to unsustainable levels during the pandemic, this individual said as well. And this is the kind of stuff you want to see when, these are, large metropolitan areas. Of course, you have increases in Chicago, New York, Indianapolis, okay, so on. This is, kind of expected in areas like that. Maybe not by, that large of a number. But the point is if, we want to look at CPI and like lowering rent and lowering housing costs, this is a positive going forward, at least for this month, and it remains to be seen kind of what happens. Now, tell me what you guys think of this. I think it was Tom was talking about it the other day, but trading 24/7. Let me see if I can pull up this article. And that really might be the nail in the coffin for all of us. I want to read a little bit about this. There is discussion, is it inevitable that stock trading will go on all day and all night, right? Let's take a look about this. Stock market's daily open and close may one day have little meaning if an idea gaining traction on Wall Street becomes widespread. So the 24X National Exchange, a trading platform backed by hedge fund founder Steve Cohen, is seeking SEC approval to operate an around-the-clock exchange. There's interest in the idea from bigger players, too. Several executives at companies that operate trading platforms told Yahoo Finance the shift from a traditional 6.5-hour trading day to a never-ending one is becoming more likely because it's commercially inevitable. Interactive Brokers chief strategist Steve Sosnick told Yahoo Finance people all around the world are interested in the most active and highly tradable U.S. instruments, and so it makes sense to offer them a willing customer base. And, in reality, I mean, yeah, that's an argument for it as well, and that will, increase the value of, the U.S. stock market. But these big guys are just going to totally dominate in this. Interactive Brokers, one of the several firms, has already increased its offerings with an overnight trading session that spans from 8 p.m. to 3:50 a.m. Eastern Time, 5 days a week. Popular retail brokerage Robinhood has two, offering 24-hour trading 5 days a week. The exchange has seen over $10 billion in volumes in its overnight transactions since launching its 24-hour market a year ago. The company said during its most recent earnings release, and on its busiest day, about 25% of the platform trading volume has come in non-traditional market hours. Wow. Well, we might have TFNN 24/7, folks. Stay tuned. We'll be right back. I believe we're going to have Tommy O'Brien on with us.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tiger's Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shue filling in for Tommy O'Brien. However, I believe we are joined by Tommy O'Brien. Tommy, how are you doing? Maybe we're not. Oh. Well, folks, we're going to get Tommy all set up on this. Let's take a look right now where we're at 9:30. Right on the market open. We are sideways in the E-mini.
Jacob?
Yeah, Tommy, how you doing?
I apologize, man.
No
Good
problem.
morning. I had muted myself by accident. Good morning, man. Thanks for filling in. I said, of course, and happy to join you on Monday. Happy Monday, man.
Happy Monday. What are we looking at this week, Tommy? What do you think we got going on?
Boy, so pretty startling. You got the Iranian president out there dying, and
Yes.
I just in that helicopter crash, I was thinking to myself this morning, obviously pretty remarkable. The oil market unfazed, man. The Saudis got plenty of capacity there. What was interesting, I found myself saying, can you imagine being anybody in, whether it's a Middle East country, anybody whose helicopters need a little bit of servicing? I wonder they're going to be upgrading their helicopters, man. I wonder some of those companies, whatever it is, the parts. I was reading one article this morning that Iran, as part of that nuclear deal back done in 2015, Germany, I guess, was going to upgrade their fleet of helicopters. That deal fell apart with Trump, of course. That deal never happened. And I found myself this morning saying, you know what? A lot of helicopters are going to be getting a lot of updating, especially in some of those third world countries this morning. Sharing some of my thoughts. Pretty interesting. How about some of the Fed speak this morning, right? We had Barr out there talking about, maybe keeping rates where they are. We got the 10-year this morning, a little bit of lower price, higher yield. I think we got the 10-year at about 4.44. Let me pull it up. Where are we sitting right now? I think we're right at about 4.44%, the yield on the 10-year. Yeah, 4.44, the yield on the 10-year. I mean, that's one of the things we're all following right now. And, boy, you talk about volatility, man. Even in this type of market, I just pull up the 10-year. Last Wednesday, we're pushing almost 110. We give up a whole full point just like that. We're back to 109. We got the 10-year approaching 4.5% yet again. I heard you talking about rents. Pretty interesting action. I heard you bringing up Tampa in there. I'll give you a little anecdotal.
Sure.
For those that have been following, you know that I have a duplex in Tampa. I used to live there myself, lived in one side, rented out the other. I rent out both sides now. I'm living in Lakeland. And it is interesting myself just looking at, so a year ago, I rented out one side, okay? And I was able to get $21.95, okay? And it's in a beautiful neighborhood. Duplexes are grandfathered in, so you can't build them anymore. A block from Bayshore. Just absolutely amazing neighborhood. Very fortunate to have a duplex that's grandfathered in, can't build them anymore in that neighborhood. Was able to get it in some of that crisis area of 2014, 2015 when the market was just decimated. But what is most interesting is, so $21.95 was a year ago in one side. So the other side I'm renting out just recently. I put that one up at, now the one I just rented has a fenced in backyard. Okay, the one I rented a year ago does not. They have some area in the backyard, but they do not have a fenced-in backyard. Both of them identical otherwise than that. So the one I was renting this year is actually the preferred unit with a fenced-in backyard, a little bit more privacy, worth noting. So I'm saying to myself, okay, it's a year later, number one. The market really hasn't materialized much over that time. Maybe I'll get the same rate, but it's got a nice backyard to itself. Okay, so in theory, you should get a higher rent, right? I put it up for $25.95 first. Say, all right, let's see, give it a week or two. I got absolutely nothing, literally almost nothing. Okay, so say, well, that's not going to work at all, right? Bring it down to $23.95 for a couple of days. Got like nothing again, and I knew right away, if you're getting nothing at $25.95, you probably need more than $100 or $200 maybe. And what happens in rent, folks, is you miss 1 month, right? And all of that extra that you're thinking you'll gain off of like a 10% hike or something is gone. So it's very important that you get it rented no matter what. So what did I do? I said, you know what, man, this isn't worth it. I bring it right back down to $21.95, and I got a ton of action and rented it out. But what I find myself thinking is, that's actually a decrease in terms of rent because it's a preferred unit. It's got a backyard, and I'm renting it out the same price I rented out the mirror image unit a year ago. And so, yeah, maybe the market is down 3-4%. It's one unit, it's anecdotal, but it's a preferred unit with a fenced-in backyard, and here I am renting it at the same exact price 1 year later.
Right.
For what it's worth, that's the deal. But all things considered, man, the market is pretty strong. That's the other side of that. I mean, you talk about,
Definitely.
If you're talking about a number that's down 4%, what did we go up? 30%,
right?
Right. That's.
And you have other cities in a major way up even more than that, right? I mean, you have Cincinnati up nearly 10%, Chicago 9.1, New York 8.9, and that's just on a year over year in April. So even if if you're talking about the whole composite, we're still up in living, I would say. So
yeah, that's why I wasn't too concerned, because really $2,200 per a unit there, I was fine with.
Right.
And so I said, you know what, the bigger worry is you try and stick to a number that's $100 or $200 higher, and you forego a month or two of rent. And on a cash flow basis, it's not worth it at all.
Sure.
So rent it out, see where the market is in a year, and you get a good tenant. That's the other side of that too, is, you know, you want a good tenant. You don't want to stretch somebody, and then maybe they can't pay. Maybe you only get a couple tenants. You don't get quite the selection of tenants that you might get, you know, and you want a good tenant. You want some applications in there. You want a strong credit worthiness. But I did find it interesting. I said, man, you know, and I told the people getting in, I said, you're getting a heck of a deal here. You're paying the same exact rent they paid a year ago, and you have a preferred unit, you know, and just to make them aware that you're getting a good price. You're not getting squeezed, you know, for that. And they're ecstatic, man.
Right.
Yeah. So well, for what it's worth. Yeah.
And, you know, again, with the idea of like lowering rates, I think there was conversation earlier this year about, you know, buying into the E-mini or buying into the S&P, really, right? Because rates are going to come down sometime this year, and so they're pricing in those rate cuts. Obviously, you had Barr today, which you brought up, saying we need a tighter economic policy for longer. And the idea is, you know, we're still well above that 2%. And what I was saying on Friday as well is, even if you get to that 2%, the Fed, that doesn't automatically bring rates down. The Fed's going to want to see, in my opinion, a long-term, you know, maybe 3 months of those kind of an average of a 2%. So you know, you look at how much we have left in the year. I mean, we're almost to June. The theory is perhaps you get one rate cut this year, but I don't see them really doing that, because the worst thing they could possibly do is lower, you know, rates, and then they just undo all the progress they've made. And now you're in an even worse situation, and inflation becomes more and more entrenched. And this is kind of my, you know, perspective on it, and I'm curious to hear what you have to think on that.
Yeah, you make a great point, because what's interesting is they want to get it to 2% where it stays at 2%. Right. It'd be one thing if they just want to hit 2%.
Right.
Then that's easy, man. They can hit 2%, because what happens when they start easing economic conditions and the cost of capital? Let's go right back to housing, right? Because I was talking about this with friends recently, and I was explaining to them, they're not really in the market, but a smart individual, and just explaining to them interest rates, cuts, how that's going to impact mortgages, right? How that's going to impact the buying power of what you can afford versus what your monthly mortgage payment is. And not even talking about, let's say you're buying a $300,000 home, what you're paying monthly for a mortgage if you're paying 4% versus what you're paying monthly for a mortgage if it's at 7%. There's a mammoth difference, as we all know now, right? And so what happens, let's just put it in the scenario that I just talked about, right? Rent. Well, one of the reasons why I'm able to find, I'll give you, I mean, both sides that I have rented right now are two young couples. It just worked out that way, but I bet it's not a coincidence, man. It's very difficult right now, probably in that same area, being a young couple versus the ability to buy a home, okay, versus the ability you go out there and you rent. Versus, you know, the payment that you're looking for and that type of accord. Being so young right now, you know, first-time home buyers, we're hearing it, seeing it ourselves. I know we're coming into the break. I hear the music, but we'll talk about, you know, when we come back. If it works.
Absolutely.
Because what's going to happen when they lower that interest rate, and then what happens? Housing prices might go up again, and how does that impact inflation?
And now we're right back in the same position we were in.
Protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're with Tommy O'Brien. So, Tommy, if you have something you want to talk about, or there's something interesting I want to bring up. Yeah.
Just if I could just finish up.
Yeah, totally.
Talking about the interest rates, right? So one of the statements today out, I think it was, let's see who said it exactly. Yeah, it was Bostic.
Okay.
Yeah, so you had a couple speakers out here, of course. He says, that I do think that our new steady state is likely to be higher than what people have known over the last decade, maybe back to where we were in the 90s and 2000s, but we'll just have to see. One of the things that many people are talking about, okay? On my chart, if you just pull up the 30-year, the 10-year doesn't go back that far, but it is interesting. You just pull up the 30-year, all right? And this is the 30-year. Where are we? Yeah, that is up to current. We're at about 116.31. Now, everyone says, oh, my goodness, look at the price destruction, right? We're at 191. You back it up even though where? 2016, we were at 171. Now, I know the market's priced off the 10-year, okay, but it doesn't go back as far. But it is interesting when you just look at where we were. If you go back any time before like 2008, okay, we're at 116.31 right now. If you focus in on this chart, many areas on this chart, we were dramatically higher on a 30-year basis in yield. We were much lower in price. I mean, look at where we were in 99. Look at where we were even in 98. Okay, even when you were peaking out in 2001, where the 30-year trading at a price point of 112. There's plenty of room here that yields could stay where they are or even go higher. So bringing it back to housing, right? Boy, if you ever see first-time home buyers actually getting the ability to come back in at mortgages at 5%, even 5.5% right now, and we've been stuck at 7% for so long, that's going to do what? It's going to put a bid into housing. It's going to potentially rise housing even more. And all of that is going to be another component into inflation factors. I mean, CPI, shelter is a huge component. Now, that is why the Fed prefers the PPI, because CPI sometimes is heavily weighted to factors that they don't feel like they can control as much, like shelter, for instance. And owner's equivalent rent is always one that people haggle over because you're not paying rent if you're an owner, right? Your owner equivalent rent is a theoretical number that many countries in Europe, I don't think the EU even uses owner equivalent rent as a factor in their CPI. But you see how that is going to be a constant. So when they start lowering interest rates, you know they're having this conversation in the Fed saying, man, what's it going to do? It's going to put the impetus. It's going to decrease the cost of capital, and it's going to potentially ignite. So there's a real potential here for, like you said, maybe we get one cut. You know, it's going to be heavily data dependent. If those numbers really dive, then, yeah, we're going to get some cuts. But that's not happening right now, man. It's not happening at all. The last thing I wanted to touch on that I had pulled up before we jump over was I saw this article out here this morning. Morgan Stanley's Wilson. I had covered him a ton when I was doing the program. He crushed it in 2022, man. I think he was the top analyst in 2022 calling for the pullback. 2023, he got clobbered because he was looking for an extension of that pullback, man. The market did nothing but go straight up. And I found myself with a little bit of contrarian saying, oh, he finally turns bullish at Dow 40,000.
Yeah, right. Right.
And there's one other bear in there. Let's see, who'd they say? One other bear in there. I just want to mention him. Who is it? Let's see, somebody out there. No, not JP Morgan. Yeah, one other talking about maybe a 20% pullback from where we are now. Yeah, here we go. Wow. Lacos Bujas, not familiar. His JP Morgan colleague. Maybe one more, few, but anyway, for what it's worth, I said, man, how do you go bullish there? And his bullish spin is only to 5,400, folks, but he had a 4,500 tag out there. But I said to myself, you know what? Maybe that's it. Maybe that's the contrarian as you finally get one of the biggest bears out there that says we're looking forward and how do you do it? And there's still a lot of heat, man, because the Fed's going to keep the pressure on, and they have to, just for kind of what we were talking about.
Well, and there's no sign of any kind of like mass illiquidity event that would ever warrant going back down to anything close to what we've had the past, 2 decades almost,
I agree. I really think, they have two mandates, right? Full employment and price stability. Is anybody talking about that full employment's a problem right now? Is everybody talking about the price stability is a problem right now? And that's where I heard Chairman Powell, and I'm going back a few meetings right now, I think it was actually on 60 Minutes when he did that 60 Minutes interview following one of his meetings. And he said, we got to get back to the time when nobody's even thinking about inflation. I found myself going, oh man, when nobody's even thinking about inflation? That is like so far from where we are right now. If that's really where they want to get to, that's a far cry from where we are, and we'll see. Time will tell, as they say.
Definitely.
So what are you saying? Where's your head?
So in the same kind of realm of talking about houses, this is an article I read NPR every now and then. They have some really interesting stuff. But have you heard of these zombie second mortgages?
I'm not sure. Please enlighten me. I don't know.
So this is, the case of this, obviously NPR does a really good job of trying to like humanize the stories, right? They tell this narrative from the person's perspective. But the data behind it is during the market crash, okay? This individual that they're interviewing, but this now is apparently happening to tens of thousands, especially in New England and around Maryland as well. They'd asked for modification on mortgages. This is during the crash in 2008. And what this article says is back then she says that her mortgage company told her a second mortgage she had on the house was forgiven as part of some modification that they had. Now, fast forward over 10 years, these debt collectors essentially bought the second mortgage that she believed was dead and legally was dead, and now they're trying to foreclose on her house. And regardless of whether or not it's legit, what the debt collectors are doing, you now get faced, these are just common people, right, who are working, they have families and everything, and now they got to go to court to deal with this. So NPR investigated this whole thing. They found at least 10,000 old second mortgages that had foreclosure activity initiated on them. And this is in Maryland in particular, or rather New England in particular, and 500 in Maryland. And this is just, it's bizarre to me that these kind of things can happen. And I was just curious if you had heard anything about it or had any input on that.
I haven't. It's pretty enlightening. It's not surprising, unfortunately, right? And it's just one of those areas, man, where, when you're entering financial contracts of any magnitude to that degree, unfortunately, it really makes it's worthwhile usually to pay whatever you have to pay to the professionals you got to pay, whether it's a lawyer or whatever it is, to make sure that you're buttoned up and you're covered. Because when you leave yourself an opening, man, unfortunately, people come for it in the end.
Yes.
And that's a bummer. It is, because that they're kind of getting exploited there. And unfortunately, like I said, not surprising. Yeah, which is a bummer. Yeah, because just like you said, they thought that they were probably free of that, that obligation, and not so much, right?
Yeah, exactly.
Yeah.
I don't know, very bizarre kind of event. And since we were on the housing topic, I thought it was interesting to bring up because, I think what's neat, too, especially about filling in, you get to kind of see these more niche stories that go on and these more niche issues that we have in the economy. And I think they're great talking points and they get people thinking too.
Yeah.
So.
Yeah, I was just Googling it as you're talking about it, and I think I found that same NPR, and I'll check it out. I'll read it completely in the next when we get off the program, because, yeah, I see the zip codes where it is, foreclosures, and that's at a time of exacerbated economic conditions, right? And that's usually when things like that will happen as well, for sure. Yeah.
Absolutely. Well, Tommy, we have a short break, so let's stay right there and we'll finish it out strong.
Sounds great.
Okay, folks, stay tuned. We'll be right back with Tommy O'Brien.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So, Tommy, we have a short segment. I didn't know if there's anything in particular you wanted to talk about, but I was reading something in the Wall Street Journal. But go ahead if you have something.
No, I was looking at Tesla. I was looking at some of those tariffs on the EV. Tesla down about 1.5% today. And, listen, anything can happen in the world of equities, and especially when you're talking about an equity like Tesla that is has fans and fanboys that never give up, and as it goes. But it was interesting when you look at, and of course, the pay package is out there, which is pretty remarkable. You're going for $55 billion as you're laying off so many people, all that stuff that goes in it. But an interesting article, you mentioned the Journal, out there this morning as well, talking about now tariffs close off the easiest route to affordable EVs. And what I found interesting is a lot of the press here about the tariffs go to the 100% rate on Chinese EVs caught much of the attention, as they stated here in the beginning. But the reality, as they state, it probably won't change much. Only few EVs are currently shipped from China to the U.S., but what will matter is the parts. And you see the new rate versus the old rate. When you're talking about batteries, you now got a 25% tariff there, up from 7.5%. When you talk about magnets, you're up to 25%. When you're talking about other critical materials, up to 25%. And yeah, it's probably necessary, man. They're going to be a huge component of growth. EVs are going to control everything. Yeah. And sorry, I don't have my chart going. My bad. I'll post that article in the Den is what I'll do this morning. Get in the Tiger's Den, folks, as you always say, Jacob, man. I'll post that article in the Den because, yeah, it's going to matter, man. And
without a doubt. And looking
what
at
were
some
you
of these,
looking at? As we got a minute left.
Yeah,
sure.
So something along those lines too. You had Li Auto down in a major way. I think obviously that's not from the tariffs, but going forward we might see some weaker movement in China. Of course, they're dominating their own market. I think Chinese people want to buy Chinese at this point, right?
Yeah, the numbers say so at least, right? For sure.
You have Apple slashing their prices in order to even compete in the area. One of the things on Tesla as well, you had Indonesia reaching out to them. They are nickel rich. And they want to propose that Tesla build refineries there for the batteries. Anyways, really interesting stuff. And then Neuralink, which isn't Tesla, but still in the Elon Musk war, which really affects the prices, the price of Tesla. I guess the FDA green light for a second patient, which is huge.
It is. And that one we could spend shows and shows on. Maybe
yes, we could.
Awesome,
Tommy,
man.
Yeah.
Great to join you, Jacob. Thanks so much for filling in, man.
Absolutely. Take care, Tommy.
Take care.